Question 9b was a tough one, an average of only 40%, and it was tough because it asked you to do a budgeted income statement for October straight after you'd done a cash flow statement. So what you want to remember is the difference between cash and profit. So your cash inflow statement, all the inflows will come in. That's different to an income statement, which is actually revenues earned. So they're different concepts. In a cash flow statement, we minus away cash outflows, whereas in an income statement, we take out expenses incurred. And finally, in a cash flow statement, we're interested in how much does the cash balance change by the end of the period, whereas in an income statement, we're actually after how much net profit or loss did we make. So once we've remembered that, we can now start to prepare our income statement. So I think the first thing to remember when you're doing an income statement is the sections or structure of the report. So once we have that, we can actually strategically go through and prepare our report in an orderly manner. So we'll start with our revenues. We'll take out sales returns. That'll give us net sales. Then we take out our cost of goods sold to get gross profit. We want to look for stock gains and losses, and therefore an adjusted gross profit. Could also have some other revenues, and that will lead us to other expenses at the end, and finally our net profit. So let's look at the info we've been given. We've been given some account balances, which would be from a balance sheet. So these are just totals. They don't describe any inflows or outflows of cash. They don't describe any revenues earned or expenses on their own. So we're going to ignore those for now. We're going to go through our additional info for October. So let's start from the top. We're told that it's a monthly reporting period, and we'll start with our revenues. So let's go and look for cash sales and credit sales. So the first thing we're told is we expect credit sales of $50,000. So we'll go and put that in as a revenue at the top. Now, do we have cash sales? Let's go and look through our information, and in fact we can take a shortcut and remember from the facts of the case that all of the sales for this business are actually made on credit, so there won't be any cash sales, and we can move on. Looking at the other items, do we have any more revenues? We've been told about wages. No. Rent is an expense. Interest is an expense. Cost of sales is an expense. That's an asset. Buying of stock. And we've got depreciation, which is an expense. So we are done. Now we can go and look for sales returns. Is there any information on sales returns? There is not. So we'll go to the next section that we want to look for, which is cost of goods sold. So we've ticked off the top item about the credit sales. Let's look through the rest to see if we do have any cost of goods sold. So this will be any expense required to buy stock and get it in a condition and location ready for sale. So wages is not a cost of goods sold, so we can ignore that. We've got rent is another expense. We'll ignore that. Interest is another expense. We do have this info here. Cost of sales will be 50% of sales revenue, so we'll need to include that. Other cost of goods sold, though, we could have buying expenses, customs duties, freight inwards, and so on. So we don't want to stop there. We'll keep going through the info to see if there's any more cost of goods sold. We're told we're going to buy $18,000 of stock. Now that is not an expense, that's actually an asset, so we can ignore that too. And lastly, we have the depreciation, which is another expense. So the only item we need here is the cost of sales is 50% of revenue. So to get that, we ended up with total revenue of $50,000. So if cost of sales is 50%, we'll times that number by 50% and get 25,000, and we'll write less cost of sales, and that gives us our gross profit. So our gross profit, given that we've only got one revenue and one expense in the cost of goods sold section, we might just move those over to the right hand column there. It doesn't actually matter, there's no marks lost for not doing that, but to keep it orderly, I try and do that all the time. And that gives us a gross profit of $25,000. Now that we've done that, we can look for our next section, which is, are there any stock gains or losses? So we've ticked off the two items in grey there. Let's look at the rest. We've got wages, no. Rent, no. Interest, no. Cash purchases of stock, no. And depreciation on the machinery, no. So we've not got any stock gains or losses, so we can ignore that. Now if we don't have a stock gain or loss, we can ignore entering an adjusted gross profit too. That moves us down to other revenue, so we need to remember what could go in that. So it's revenue that comes to the business but not from selling stock. So that could be either interest or discounts. So let's have a look through. Do we have any interest or discounts? We've got wages, rent, both of those are no, they're expenses. The interest here, there's actually interest expense, so it's not an interest revenue, so we'll ignore that. Cash purchases of stock, and depreciation, no. So there's no other revenue, and we can move on to our final section, which is the other expenses, and then therefore our net profit at the end. So what we want to do is look at the remaining items that we haven't used yet. Are there any other expenses? We've got wages, yes, will be an expense. We've got rent, expense. Interest will be an expense. Buying stock will not, that's an asset. And lastly, we have depreciation, which will be an expense. So the 4 items in pink there, we're going to need to go and get a number for each of those. So let's start with wages paid. So what we're told is wages paid is $23,200. Now at the top of this video we said there's a difference between cash paid and expenses incurred, so that figure is not necessarily our number. So what I'm going to do is use the account balances information here, and we were told accrued wages at the start of October would be $1,700, and I think it's often beneficial, even if we're not given one, to go and use a little T account. Just recreate it in the margin or on a blank bit of paper for wages, and that's whatever figure we get in this ledger will be the figure we need to put in our report. So we'll start with the $1,700 of accrued wages at the start. There's $1,900 at the end. So what does that mean? Well, the $1,700 is actually an expense for last period. It just wasn't paid. So what we'll do is we'll take that out of the payment. That's actually a paying off of accrued wages from last period, so we're going to ignore that figure. What that does mean though is that the rest of that payment, which is $21,500, must be paying for wages incurred this period. So that would actually go in as a debit to our wages account as an expense. So we paid for wages this period $21,500, but we've got to use that figure in dark blue there. The accrued wages at the end of October are expected to be $1,900. So what that means is we think we'll incur it this period, but we won't pay it. So just because we haven't paid it doesn't mean we could ignore it. That should go in as an expense. So we've actually got 2 items in the wages ledger, and if we totaled that, we closed at the profit and loss summary for $23,400. So that is actually the figure we will put in as our wages expense. Looking at the rent, this was quite complicated and it actually had a simple answer, but to think your way through it, you might have needed to sort of plot this out. Rent is paid 3 months in advance. So we prepay in October 3 months for November, December, January. We're told it's $2,000 in November, and then it will go up by 10% in December and January. I actually can ignore all that information. We're only interested in the expense. We're not worried about cash flows here. So what I'm interested in is how much rent is incurred in October. Well, the rent in November is $2,000. And it doesn't go up until December. The rent, given that we're only reporting monthly, for October is simply $2,000. If that's what it is in November, that's what it must be in October. So we can go up and put that in as another expense called rent for $2,000. Interest on the loan is $5,400 per annum. And if we do the maths on that, $5,400 divided by 12, that's going to be $450 per month. Actually, another one with a lot of info, but actually an easy answer. So in this case, we know it's an expense of $450 every month. We know 6 months is paid in March, 6 months is paid in October, for those periods indicated by green and gold there. But we can actually ignore all that. This is just for 1 month. We're looking at not cash flows, we're looking at how much was the expense incurred. So that will be an interest expense of $450. We have depreciation on the machinery is 12% per annum straight line. So what we want to do is look at the account balances and see that the machinery at the start of the month was 90, and at the end of the month we expect it to stay the same. So therefore we're not expecting to buy or sell any more machinery. So what we want to do is take that straight line method. We're going to use the one where we calculate the expense by taking the cost and multiplying it by the straight line percentage. So we know the cost will be $90,000 for the entire month. We're told the depreciation rate is 12%. 90,000 times 12% is 10,800. Obviously that's for a full year. We're only doing an income statement for October. So we'll divide that by 12 and we'll get $900, and that will be our depreciation expense for October. So that's everything. We've used all the items there. We don't have any left over. So just looking through our marks for this question, we have 1 mark for the sales, cost of sales and gross profit, 1 mark for wages, 1 for rent, 1 for interest, and 1 for the depreciation. No marks for the total expenses or the net profit figure, which was actually a loss of $1,750. Looking at how students performed, we can see 31% struggled to get a mark. Now a lot of that would have been kids just not getting to it because this was at the end of the paper. And at the other end, 12% got 4 marks. The average was only 2, so well below, so it's a 40% average, well below the state average for the rest of the paper. And the examiner commented that it looks like some students were confused between the difference between cash and profit, so make sure you're up to speed with that. GST was a common alien item included in the income statement. Now we did GST in 9A for the cash flow statement, but that's got no place in an income statement, so we can ignore that. And lastly, another common error was including all 3 months of rent paid. Same with depreciation, putting in 12 months and so on. So what we want to remember is that for an income statement, we're only looking at what's incurred and not what's paid, and that'll be different to the figure that we would have put in the cash flow statement.